This is a very, very exciting moment for me and for the REIT Fund because for the first time ever, we have had a student panel, which will become a tradition, which starts with John Lawrence and Anton Peak, the leadership of our Schack REIT Securities Fund. Actually, people that are in the REIT Fund, could you stand? Scott Robinson and I were talking about a year ago about a fund, and I said to Scott, there's no way the NYU bureaucracy will approve this in any less than 2 years. And 6 months later, we were up and running. And it's been really amazing, not because Scott and I are amazing, but because students, in addition to working, taking classes and everything else, dedicated themselves to setting themselves up like a company, and to diving right in. And so I'm really happy that John and Anton are going to give the first presentation of the first couple of quarters of the fund. So take it away.
Thank you very much, Mark, and thank you all for staying to the very end. I sincerely appreciate it. It's great to have this opportunity to speak to you all today. It's crazy to think that I was here a year ago. I certainly wouldn't have thought that I'd be up here right now or have had this opportunity in general. I met Mark pretty much on an 11-hour plane ride. We were sitting next to each other on our way to Brazil, and I think an outcome of that was that it would have been, either him hating me or him loving me, and I guess he liked me enough to agree to let me be president of this fund. But our accomplishments certainly wouldn't have been possible without the many analysts that we have that stood up just now. So we have a big team, over 20 analysts covering 14 different sectors, from timber to retail to office, et cetera. We'll talk about that in a little bit. And then we also have an econ team informing our top-down analysis of 4. We have a leadership team of 6 and an advisory board as well. Excuse me? Right. So the goal really with the fund is for our students to develop fiduciary mindsets, to take responsible investment risks, and to analyze equities with a purpose. So these are some of our returns, allocations, et cetera. Something that's interesting you might see here is office, 18%, target 4%. Why is that? It's because when you're first starting a portfolio, you can't be perfectly allocated all at once, and actually office was our first allocation. We purchased for NATO Series L preferred shares that were trading at a 40% discount to liquidation preference and throwing off an almost 9% dividend yield. As for Omega, that was a bet on the aging population, as well as the infrastructure and real estate that supports that demographic high-level trend, among many other reasons, which you could ask our healthcare analysts about. And as for American Tower, $100 billion market cap REIT with large exposure to foreign and growing markets, including India. In January, they just sold $2.5 billion of their India portfolio to Brookfield REIT, so they're very much involved in growth, despite being quite large. And then that's all I have to say on this one. Why don't I pass it off to Anton?
Yeah, sure. So it's been definitely a very tough market for us to navigate. We really started pretty much at one of the most volatile time, and it's very tough, especially for, we're young professionals. We haven't been through a full market cycle, so it's harder for us to approach the potential growth and future of this market. But we're very well equipped. We have a fantastic team. So we have our analyst led by Aaron Goldman. They're carrying out this bottom-up analysis, looking at relative and intrinsic value, and they managed to find opportunities in the market. And some people would think we have zero allocation to office, but that was our very first allocation, and it's still one of our largest allocation because we managed to find a position in the capital stack and in the office market where relative value and the risk-adjusted returns were very attractive to us. So that's kind of how we try to, be always positive and find opportunities despite the market. But we have our team of econ analysts, or econ strategists led by Nicoleta Bochenko there, who are following trends and the macro environment because we realized how much the REIT sector is dependent on the macro and obviously the interest rates. And I do believe I agree with Matthew Lustig before, who was saying that we should deploy as interest rates are high, and as soon as we get our first cut, REITs should rally. So that's kind of the rationale behind it, and we're very much positive on that, and we hope this will happen. It has been tough, but we still managed to outperform the benchmark, which was our very first goal, obviously. So also we discovered the volatility. Most of us are from private real estate market. It's very comfortable. You don't have your assets marked to market every single day and every hours. Discovering the swings of the public markets have been extremely tough for us, but like a few weeks back, we're up 8-9% on the total portfolio using the accounting for ETF and money market positions. And boom, a few weeks after, we're still positive. We're still at 4-5%, and we're still outperforming the benchmark. So we're very happy for that. We can be very proud of us and proud of the team for that achievement. Looking at only the single named REITs compared to the FNAR, we are here at 0.8% since inception versus 0.3% for the FNAR, so that's a 50 bips alpha over the benchmark, so we're very, very happy for that. Looking at the future for the fund, is there another slide for that?
Yeah, well, I was just going to tag on to that and say, I think I forgot to mention the FNAR, so it's the FTSE NAREIT All REITs Index. It's comprised of 170 different REITs. So our goal is just to beat that, obviously grow AUM, beat that index, and I guess I didn't mention that earlier. And it's good, but it doesn't necessarily matter in the short term. We're really focused on
the
long-term returns, long-term growth. Think of it more as a retirement account and not a hedge fund. So
exactly, yeah. No, for sure. And we're not shorting your stocks, guys. Don't be scared. And yeah, we're really a long-term. We want this fund to stay here for the future generations of Schack students. We want students to have the opportunity to live and learn like we're learning for the next centuries or whatever. And yeah, so we want to be really advocates for the sector. We want to. We love REIT. I love REIT. I think it's a great investment vehicle. I think it's a very great sector. So we want to, put more lights on that sector. We have the blueprint team, the Schack-led paper that you have on your tables there. We have been publishing articles already, and we want to keep publishing research and coverage on REITs to, just advocate and make sure investors, students, academics put more representation and put more the respect. Wow, what was that? The respect that the REIT sector deserve. So for the future of the fund, we want to grow our asset under management. Obviously, we're a non-profit fund. The idea is not for us just to make money and to get fees. We're not making fees. The idea is to use part of our dividend yield to fund scholarships, to give back to the community of the students. Oh, thank you. So we will be looking for donors. We'll be looking for professionals wanting to mentor us. So the REIT investment firms to mentor us and do partnerships, but as well with REITs on research and just to even strengthen the ties between NYU and the REIT sector, even though they're pretty strong already, as we can see today. And yeah, that's for the future of the fund.
I think Anton summed it up pretty well. Thank you very much all for your attention. Last thing, please connect with us. If you're a student looking to get involved, applications opening up in the next few weeks. If you're a professional who wants to come and chat with us, we would welcome that very much. So thank you very much, and join us for a happy hour after. Thank you.